I got 2 words for you. As expected. That's it. That's the whole video. Today's price action was expected. And I called it. I called it all to the dot. I called pre-market price action. I called live market action. And I called after market price action. I made little to no mistakes. And I took a lot of notes on what I should talk about in this video. And these notes are going to be not only educational, but they're also going to be kind of like improvising and improving the understanding of the ICT 2022 buy model. So let's get right into it, shall we? So what do I mean by as expected? If you guys are in my Discord or have watched any of my YouTube videos in the past 3 days, you would have known that I predicted, and I still have, I had a weekly bearish bias. So obviously daily bias. The daily bias on multiple days here was bearish, all the way from Monday to, I guess, today and tomorrow. Why is that? Well, recently, I mean, a few months ago, I've came in contact with what's called a PD array. Now, this is part of the notes. What is a PD array? And I think we're going to start with that because it's what is underlyingly the most important thing that you will learn today for bias taking. A PD array, in my personal explaining, is a premium / discount, PD, premium, discount. An array is arrangement of imbalances in either the premium or the displacement or the discount zone, my bad. Now, as ICT has taught it, and I'll show you a little graph here, you can see that this is the monthly, but we're also going to talk about high time frame arrays. From the monthly to the weekly, all the way down to the daily, all of those time frames are considered high time frames. If you go under the daily, it's now considered a lower time frame. So when we say a higher time frame PD array, it means we are looking on either the daily, weekly, or monthly for a premium / discount arrangement of imbalances. Now you might ask yourself, what the fuck is a bearish and premium, and what is this discount and fucking this? Look at this. Just forget that there's a monthly premium here, monthly discount. This could be weekly, daily, like I said, but we're going to take the monthly, for example. As ICT teaches, a discount in a premium zone can be flipped. So as of right now, he's taking a swing low to a swing high, and that creates a range. That range forms a discount range and a premium range. The halfway line, or the halfway point, is called equilibrium, or consequent encroachment, but equilibrium is the term. When in a discount array, so anything under the equilibrium, is a discount array. Anything above is a premium array. This is the order that you look for PD arrays, so the arrangements of imbalances. It's also known as a hierarchy. Now, what is a hierarchy? If you guys don't know your vocabulary, it's just basically like a list down, right? It's a hierarchy. It's from the greatest to lowest or lowest to greatest, blah, 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 right? If we're coming down from this level, imagine we just made a swing high over here, and we're coming down to equilibrium and a discount array. What we're going to be looking for, and this is our swing low at that blue line, what we're going to be looking for is the hierarchy of imbalances. So what comes first? A mitigation block comes first, then a bullish breaker, liquidity void, fair value gap. Now, fair value gap, usually, if you do consequent encroachment or the equilibrium of the discount array, so you take your fib and you draw from the consequent encroachment or, halfway point of this whole range to that swing low, you'll see that the 50% will almost always line up with a fair value gap. The further down you go, the higher buying pressure there will be. Obviously, you won't always see fair value gap. Obviously, you won't always see mitigation blocks. You won't always see breakers. You won't always see liquidity voids. Fair value gaps are probably the most common that are formed because when we come out of this discount to premium to form that swing high, we form a lot of displacement. And displacement is known through fair value gaps. It also creates bullish order blocks, so institutional blocks, or institutional order blocks, my bad. You have rejection blocks, and then obviously old lows and highs, and then you obviously have that swing low. But if you're even trading to the swing low, that just means you're breaking out of the range. Now, this is important because this is what we're going to be teaching here, or I guess this is how I got my bias for the whole week. So as you can see here, we had this weekly or daily, you could say daily fair value gap that happened here. Let me just mark it in black so it's easier to see. Okay. And you might be saying, French, this is from like a few weeks ago. And I would completely agree with you. But this is important because what happens? As you can see, price respects the consequent encroachment of this fair value gap. It gets bought up. It doesn't quite close above, but it does get bought up. It does show a very nice doji candle. And you can see the next candle is a very nice displacement. Remember that word. It's displacement upwards. Okay. And then we just kind of trade higher. As an ICT trader, if you've been trading ICT or you've just started, you would know what a swing low, swing high range looks like. Obviously, the higher time frames, the better you can focus on them because it's more clear. And as you can see right here, you can see that from this swing low to this swing high, there's a range. Make sense? Now, I'm going to do a little more pretty and with more colors so you really understand. What does that look like? That looks like a discount premium range or a premium discount, whatever you want to call it. Where's the equilibrium or the consequent encroachment? Right at this line right here. Right here. So like I said, anything under this equilibrium is going to be in the discount zone. And what do we look for? We look for bullish PD arrays. Okay. Now, you might be asking yourself, why are we even drawing this range and why are we not even going higher? Why can't we just go off these bullish wicks that look bullish and just go to all-time highs and sweep out this high? Because look at this. We created this swing high by sweeping this high, first of all. Okay. That had a swept. So that had an effect. So now we're obviously, this is a bearish, right? We sweep it. Now, yes, maybe you could say, oh, we swept this one low. It went lower than this low. I think we're bearish and then we're back to bullish because it swept it, but it closed all the way up here. I don't believe that. I wait for the next day, swing low. But this is a swing high. So what happens? The range gets created. Now, this could easily, listen, this could very easily come back up the next day for CPI, for example, and just break through. And then you delete the range. That's not a range anymore. Then that next swing high would be up here, for example. But that range is still being created every single day if it expands. At the moment, it got created there. after that liquidity got ran. Does that make sense? Now that doesn't explain everything and why I was targeting this daily fair value gap. What I saw here was, first of all, the wicks and the bodies. This happened on Friday. Friday, as you can see, the wicks are, it's almost like a doji. It doesn't know where it wants to go. And then Monday, we have a bank holiday. As you can see, the doji is super small, very, very low volatile day, super small. And then what? And then Tuesday, pretty nice down move. Some people would say it's bullish because look how it went down, but it got bought up and it could, come back up. But with my experience with trading, I've just never seen a move like this on the daily, at least, where it just comes down, buys it up, closes as bearish, and then comes bullish. That's just either manipulation or some kind of red folder event. So why was I targeting this fair value gap? Because when we're looking at this chart, I'm looking now in the discount, right? I'm looking in this zone and I'm looking for mitigation blocks, bullish breakers, liquidity void, fair value gaps. And I don't really look anything below fair value gaps. The main thing I focus on would be a fair value gap. And then on a lower time frame, I would look for lower time frame PD arrays as breakers, order blocks, or anything like that. But the main thing I focus is the daily time frame. The only thing I can see on this daily time frame is a bullish fair value gap that happens right here. Right here. I hope you can see this. That's the only thing I can see. Okay. And whoops, sorry for that. Let's just go and look at what I had predicted a few days ago. Okay, no, that does not work. Let me go find another picture. Okay, this one's better. I had said what to look for: high time frame PD arrays, fair value gaps, order block, external liquidity. As you can see, I had it all planned out. It was a little different, but I still had the range. I said we have created a premium and discount range, as you can see here. We've swept those highs. Look at that doji, it looks weird. Current week low to break. So I was expecting that to break. I was expecting this liquidity to be ran. I was expecting this low and this liquidity to be ran and to finally hit this premium, or my bad, this discount. I got it wrong, my bad. This is supposed to be discount array, which is that daily fair value gap. I marked out all the news to watch out for. And I said, I don't want to see this week trade down. I want to see this week trade down to the daily and then buy the wick back up to the previous week high. So I predicted it. And as you can see, this is the wrong one. As you can see, where was it? Here, predicted it very nicely, right? So that's a lesson on premium arrays, premium and discount arrays. So that's the range that I had. That's the fair value gap I had. And that's everything I had other than that. Now let's go back on the weekly where I have all of this here and let's make it visible. And let's go back to, let's do a 4-hour chart. Oh, we don't need this anymore. So there's a lot, and I know it might be confusing right now. There's a lot. I'll go over it because every trading day I do mark quite a lot of stuff on my chart, but I like to be real with you guys, right? I like to be completely transparent. This is what my chart looks like. And this is right after school. I had no time to clean it up. This is what it looks like. If you're looking at the hourly, 4-hour, it looks messy. I'm working on getting it, cleaner, but it's hard because I have so many things to mark out 24/7. Let me try to make this like understandable from just looking at this. Maybe let's just hide this for a second. All right. So I want you to notice that daily fair value gap is somewhere in this imbalance. So just imagine like a big gap right here that's being targeted right here, right in the middle. You can see that on Tuesday we kind of come up and then come down. This is the price action that I was talking about. Hits those highs, sweeps that, comes down, consequent encroachment of this wick. And then it trades down on Tuesday, pre-market. And then we get to 8 and 9 on the New York session. And you can see that these lows here, not only this one, but this one, both sell side have got swept on the 4-hour. You can see now that this sell side down here, the swing low, not only was inside this 4-hour fair value gap, but it also got closed above and it got swept. This one, as you can see, also got swept. So there's two liquidities there. Oh, and on the 4-hour, there was I'm pretty sure I was expecting a move up into, yeah, that's what I was doing. So I got a little carried away during pre-market. I was expecting like a move up to this institutional order block and this strong imbalance on the 4-hour. But as you can see, I didn't realize, but this wick had already tapped into that 4-hour imbalance. So you can just delete that because it already tapped into it. So no need to worry about that. So it just kept going lower. This was major low swept. So this was previous day, weekly low, that stuff. So that was major low swept. Sell side gets swept. This sell side gets swept. And you can see, let's just move this down here. Target, we don't need that anymore. You can see there's a lot going on the 1-hour. Let's see where this is. 7, 8, we get, I'm pretty sure there was news. There was 8:30 news. Let's go down to the 30-minute. There was core retail sales at 8:30. You can see that had a pretty major impact. You can see that the 8:30 did take out those lows down here. So I marked that as swept. We can delete that. So a lot of liquidity is getting swept. But what was the trade idea? I'm pretty sure I had it marked out in the Discord. What did I say? Okay. Good. So I wanted to do this and then tap into the daily order block. So here, I wasn't looking to go short. My whole bias today was to go long off this daily fair value gap, which is what happened. I did go long and I waited because of my model. Could I have gone short? No, because the 8:30 news came a little hot and I didn't have an entry. And so the funny thing is, if you look at the 5-minute, when I called this out live, I said, oh, 8:30, right? 8:30 came down. Price action obviously is not going to buy its way back up during pre-market. So it's going to wait until live market to buy this back up. But where does it truly want to go? It wants to go to the consequent encroachment and then hopefully fill this whole fair value gap just to get it over with and get all the orders that are sitting down here. I wasn't too worried about, predicting the super, super low. I was just worried about how far it would go down. I didn't want to come down all the way down here. I just wanted to sweep it. And you can see on the daily, it definitely did that. So what happened? Came down. I said it tapped into this daily order block or fair value gap. I was like, fuck it, yeah. I predicted price. I predicted where it was going to be. Now, this is where we get serious because this is where we're going to look for a buy model, okay? And this is where it actually played out pretty perfectly. I was not live. When I say I'm trading live, I'm giving these images live, like with the Discord here in charts, but I'm not actually trading live with other people, okay? So we came down here, consequent encroachment, and this was 9:50. So I was in class. I was getting to school. So there's two market structure shifts that I was watching for. I didn't see anything on the 5-minute at first until I saw the swing high here, and then the swing high created that swing low, and we broke that, right? But the major thing I saw was, I believe on the 3-minute, there was, let me just delete this so we can see clear. There was a 3-minute market structure shift here that happened, swing high, all the way down, swing low. This swing low is important because it hit the consequent encroachment. So this is where I was like, okay, so this is where we could buy it up, close above. And what did it do? It bought it up, it didn't close above, so equal highs. But this is still considered a market structure high because this high did not close above, nor did it trade above. So it's technically the same high. So we're going to base it off this high now. Swing low. Doesn't create a new high, so it's just still this high. Breaks it on the 3-minute, as you can see with this bullish displacement. My bad. Now, what I was waiting for, I didn't have this inversion gap marked out, but I saw this order block here play a nice action on the 3-minute as you can see, hence why price right here, price reversed back down. Okay. And this was expected. We wanted this to come back down. Why? Guess what? You remember what we talked about early in the video about the premium and discount range? Well, guess what? That range can be used on the lower time frames. So what did we talk about? We said swing low to swing high. Let's mark it out. Swing low to swing high. Boom. When would you mark this range? Please tell me. You wouldn't mark it when this high gets created. You'd mark it when the swing high gets created. When this candle here closes down here, that's when you'd mark it. Now, obviously, I had it marked already because I knew what was going to happen. I trade in the future. Like I'm already in the future. I know exactly what's going to happen. So I had it marked already. Like you should have, when you're trading like this, you should be expecting a move down. And when you see aggressive moving down, break a structure, this should already be up. So then when this gets formed, you know exactly where the discount is. Now, I did make a little mistake. And at first I didn't have the OT drawn here. What do you see here? I'm going to zoom in real quick. In this range, particularly, right now, all I see is two things. I see an order block and I see a fair value gap. Can you see those on the 3 minute? Because I can. 3 minute, fair value gap. And you have a order block right here. And it's going to be a bullish order block. That's what I saw. So my dumbass entered off those and not the OT. But when you take a closer look and you draw your OT, which is from, you just do the range, swing low to swing high. You get the OT and you drag it out a little bit and you wait for price to come down. What did it do? I mean, this is like, I almost want to say like this is the best strategy, but I can't. But just look at where the price of those candles closes. First of all, look where the wicks are and look where it was trading, and then look where it closed. So you're telling me price on the 3 minute hit an order block, came all the way down with two candles, aggressive move down, almost buying or selling all of this move in half a second, or in basically 6 minutes. And you're telling me all of a sudden it hits this random level and does a doji and just come back all the way up? Dude, there is no way that happens. Look at it. Look at it. Please. Take a second. So this happened on the 3 minute. So we can delete this 5 minute market structure shift, because if you're going to mark a 5 minute market structure shift and enter off the 3 minute, you're going to have confirmation. You have to have confirmation on the 3 minute that there's a 3 minute market structure shift, 3 minute range, 3 minute OT, right? They can't be two different time frames with two different entries. So I entered a little early. I did make a mistake. That was my bad, because the problem is because I was in class and she was taking all her phones. So I was like, I need to get in this before, I knew I wanted to get down here and enter down here. That was the plan, but I had to get in somehow. And to be honest, getting here and here isn't much of a difference, because price is always, it's going to come up. It just makes like half a tick difference. That's it. And that just means the stop loss would have get taken out. That's the only difference. But I knew that the stop loss had to be here for a tight stop loss. So no matter what, it'd be there anyways. So the entry, I'm not going to mark my entry, but I'm going to mark the strategy's entry that you would have taken if you took this trade. You'd be long, consequent encroachment, or the OT. Obviously, your stop loss would, if you're feeling very risky, would just be right there. Personally, it's a little too close. This OT is not wide enough, and not the range is not big enough, and the OT is very small. So all I'm going to do is I'm going to target what I'm doing now is target the consequent encroachment of this wick. So what I'm going to do is I'm going to grab my fib, go from the low to the body open. I'm going to draw my 1 minute fib, drag this out, and then put it on the consequent encroachment of that bullish fib. Okay, because if price comes down and it closes under this, I know I'm out mentally and I'm not going to lose on half a tick. All right, take profit. Now this is the part I screwed up on. Obviously, you draw your standard deviation, swing low with market structure shift, and you can see the standard deviation lined up pretty good. It lined up pretty fucking good. Okay, and this is another lesson. Where did my text go? There it is. Another lesson, standard deviation. This is what I want to talk about because this level predicted literally it. Look at this -1, by the way. Now tell me on the 3-minute, because if we're trading on the 3-minute, I'm going to stay on the 3-minute. Tell me on the 3-minute, where's that -1 at? Is there anything here that's telling us that this -1 is going to have an impact on the market on the 3-minute? There's some wicks here. There's some, maybe a fair value gap. No, that's too low. Oh, what is this? That's an institutional order block. Wait a minute. You're telling me that standard deviation off this market structure shift was able to tell me where price would react off of? No, hold on. No, that can't be right. No. Consequent encroachment? Wait. Consequent encroachment of that order block made this move go. I don't believe you. I don't believe you. There's no way. Well, yeah, there's a way. Yeah, there's a way. There you go, man. That was it. Again, on the 5-minute, you can see, if you're looking on the 5-minute and you're trading on the 5-minute, this doji was beautiful. Not only did it close above the OT level in our entry, but it also closed above the OT level in all, and it closed on the daily fair value gap. If that isn't ICT enough for you, I don't know what can convert you. Like, I get it. You want to trade supply and demand. You want to try trend lines. But man, you got to look at price sometimes. It moves in a way where some people can understand it and some people just have no clue what's going on. And this is a time I'm proud of because I understand what's going on here. And I don't have 40 fucking different things on my screen to understand. This is called price action. And once you understand something like that, you're going to open your eyes and realize some stuff. Just saying. The take profit obviously was set to this because like a dumb fuck, I thought this would run up to these highs because this lined up pretty nicely with these highs. So I was expecting a run up to these highs. What actually ended up happening was, I'm pretty sure if we look on just a higher time frame or lower time frame, this hit. Okay, that's what happened. Yes, it hit a premium array to come back down. But why would it come back down? To sweep this fair value gap. Remember, this market structure shift here happened off the consequent encroachment. So it got halfway there, right? I said we were targeting the consequent encroachment for a move back up, but I got a little carried away and, I got in the market a little too early and I didn't realize it wanted to sweep the whole daily fair value gap. But to be honest, I should have thought of that because if it got down to that level and it wanted to trade down, it probably could have traded down all the way, which is exactly what happened. But if you've watched any of my other videos, you know the famous quote, you can't go lower until you go higher. So this is almost like a fake out, right? People go long and they have all their stops down here, right? And then go short, they sell their stops and everything goes back up, right? Now, the good thing is my take profit was at the -1. As you can see, it clearly got hit. So when it came back down, we just broke even. So I was still in profit. So, not a big deal. It's just not a huge win either. Should have been a little more smart about that play, but I'm happy about this because the buy model, the only thing I'm happy about is the buy model that worked down here, right? The OT entry, that's what I love. I love to see you guys react on the price action there. I mean, some people just can't believe those candles are formed almost every day off a OT level that someone drew out on a range. All right, so anyways, price comes down. I drew this inverse fair value gap thinking it was going to come back up, but as you can see, it just gets violated here. So because we're coming back down, and then we come back down, we come back down, we come back down. This is all price action you can kind of worry about, and then it comes back down to this daily fair value gap. As you can see, we trade down, and this is where I'm pretty sure I want to talk about different time frames. What do we say? Yeah, QQQ and QES. So let's look at ES. Well, yeah, there's a lot of stuff on ES. ES went a little lower. I wasn't able to trade ES, but ES is delayed by 10 minutes. That's why I didn't like it. I just can't see what happens in 10 minutes. I'm not actually in the future. But as you can see, ES came down. I'm guessing there was a level here. I'm not going to really mark it out. This was consequent encroachment. So this was the daily fair value gap we're talking about on SPX2, also on ES. You can see that 8:30, 8:30 ES had already came down to the consequent encroachment, traded under, and basically swept that. So it was very obvious on SPX that we would sweep that too. NQ, I'm pretty sure, did the same thing. Oh, wait, no. NQ was a little higher. And NQ traded higher, which is another reason why I think SPX will now come back up. And that's the only thing it wanted to target, because NQ was still up here. Even on the daily, you can see that the discount array is down here, and there's nothing else here. And NQ did the exact same thing. It traded down. It's buying its way back up after sweeping 1, 2, and almost 3 liquidity points without touching that fair value gap. And I think this will be a breakaway gap because it won't try to touch that. But let's look on the 5 minute. I just wanted to show you if NQ, I'll show you, oh yeah, this level down here on that liquidity, you can see it just, pretty sure there's an SMT somewhere. Anyways, that happened. What else? Oh yeah. So then what happened was, now, obviously, now that we've done this trade, I was looking for another entry. Because we've swept this high time frame PD array, I was like, okay, well, if SPX wants to come back up, it's going to come back down, and it's going to create another market structure shift. The only thing here is I was a little confused. There was nothing for me to enter off of. I looked at the 3 minute again, because that's what gives me the cleanest highs. As you can see, there is something that formed. I was like, oh yeah, this is perfect. We're gonna do something. Well, we almost did. What ended up happening was this here. As you can see, got traded above, but it didn't close above. So this is not a valid market structure shift. Came down and then broke it. Only thing, I don't like this at all because it's not a clean swing low, break of swing high, make a new swing high, break this. It's not clean. I don't like it. That's why I didn't take it. Then what it does, comes back down, breaks it. And even if this is a full market structure shift range, you can see that you mark the swing low. I'm guessing this is not a breaker structure, so you can't enter off the OT here. So you mark the swing high that gets created up here. And then what happens? Well, what did I just say? I just said this was a swing high, right? But is it? Because we're trading on the 3 minute. Is this a swing high? Is it? What's the high here? 47.37.8. High here, 47.37.8. It's the same high. There's no swing high here. So when I would draw my range, oops, my bad, from the swing low to the quote-unquote swing high, there isn't actually a swing high. There is a high created. Yes, it comes back down. Yes, it creates the range. But as you can see, there's also an order block here that I marked out on the 5 minute. Let me just go here. Okay. Let's see. Does it create a swing high here? Nope. Nope. But I still draw the range. As you can see, there's a macro, expansion macro that gets formed. You can see that in the 5 minute, there's something very obvious. There is a little tiny fair value gap. I want you to notice before this order block. Right here. Boom, boom. And this is the power of ITT. I mean, I love this. I love this. I know there's a lot of colors. It looks fucking, I look colorblind now, but Look at that fair value gap. Look where the candles close. Ah, this excites me. They don't close below the consequent encroachment of this tiny, tiny, little tiny gap. None of these. They all close right on the consequent encroachment. If that doesn't tell you that price is just algorithmically traded, I don't know what else can convince you. And then not only on top of that, you also have a bullish order block that gets swept or that gets hit. I don't know how I'm going to convince you. Obviously, you might be saying, oh, but French, why does it start going back up? This is just a tiny fair value gap and a tiny order block. Why doesn't it come down to these levels down here? Where are we? We are. Go ahead, say it. We're in a discount area. We're in a discount range. Buyers can start buying under the equilibrium of this range, which is right here where my cursor is. Anything under, they can start buying. And guess what? They not only have a fair value gap, but an order block to start buying from. So it's a low risk buy. Very low risk. And as you can see, yes, it chops around, but it definitely pumps up. Boom. I'm pretty sure if I could show my executions real quick, what I do. I bought it. Well, I didn't buy it in the discount because I was a little late. But you see it worked out. Worked out very well. Right here. What happened? Oh yeah, this was the trade here. I sold super late for break even because I wasn't on my phone and this was during lunchtime. So I was late and I closed it during lunchtime. And this was demo. So I take some of my trades on demo just to show you the executions because I don't know how to share my options contract, but I just show you the trade I took. This, I don't know what I did here. I'm not even sure. What was this? Oh, this was, oh, I know this was a limit order. Yeah, this was a limit order that I set for some reason. And I also bought it up here. Okay, yeah. Oh, shit, that's right. That's what I wanted to talk about, yes. Before we end the video, let's see if there's anything else I need to talk about if you guys are still here. Oh, yeah, okay. So there's two things that we need to talk about. First of all, this 1 hour market structure shift is about to be formed. As you can see down here, let's just TP1 standard deviation. We can get rid of this. This high right here, I'm looking at. Swing high, swing low, sweeps this daily fair value gap. If we close above, we create a market structure shift on the 1 hour, and that's going to be huge because that means that the standard deviation of not only this range here will be insane. And as you can see, the negative 2.5, negative 2.5, negative 2.5, and negative 2 are targeting all-time highs. So call me a fucking wizard or not, or, you know, fucking Wizard of Oz. But I'm saying price does a little switcheroo and comes all the way back up to all-time highs because all of this engineer liquidity that is sitting so nicely. What the fuck? So nicely, all right here. All of this engineer liquidity. It's got all that to come back up to. And it's going to have fun. It's going to have fun. Another thing I want to talk to you about is the current long position I have. So this is where I lose all my money, is doing swing trading. And I know this is a little dumb, but I believe in myself. I believe that this is the level we wanted to target. And if it does not work out, it doesn't work out. That's going to be the last time I'm swing trading. But I bought calls down here to target all-time highs, as you can see. The only mistake I did was I bought it for 5 days. So that was a little mistake. That means that we basically have 5 days to come back up. And the only problem is that in basically 2 days, we hit the weekend. And those aren't trading days. So price can't really move up or down during weekends, which means that theoretically on Monday, my contracts have been sold. And whatever we don't do for Monday, like I'm basically fucked. So that's currently what's going on. I can't sell them because we're not open. I'll check in tomorrow. What I would like to see maybe is, and I should have probably waited until tomorrow, but I would like to see this, obviously this high gets broken and closed above. I would like to see this hourly market structure shift work out in our favor. So what would happen was, could be high gets broken, and then as you can see, the range is from the swing low to whatever swing high we make, for example, all the way up to this high, for example. We come back down, and the OT would be, you know, I don't know, I'm just guessing here, but the OT would be back in this fair value gap or even higher up here. That would be nice. And we could see, and then I would enter calls back here, but I enter calls a little early, anticipating a nice bullish run up. Didn't expect this for market short shift to be created, but if it does, it does. It is where it is. I think that's gonna be it for this video. I hope you guys learned something. I'm gonna clean this chart up real quick, and I'm gonna post it on my Discord. I'm gonna do a daily recap, and I'll see you guys. Probably not tomorrow. I'm busy tomorrow. I got like an alumni thing at my middle school that I gotta take care of. So I definitely won't be posting tomorrow. Got a lot of homework to do. I'll probably see you guys on Friday, or if not on Monday. All right. Stay safe and